Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Sebastian, CEO of Option Pit. Mark, it's great to see you as always, and there must be something about the month of March in markets because we saw volumes really take off considering what's happening in the banking sector and just the news cycle in general.
Yeah, March volumes broke the record between what's going on with the banks and the continued rise of zero DTE options, along with really wild moves in the market. March was a record breaker in terms of option volumes, and option volumes just continue to go higher and higher and higher. Just a key that if you're not using options as a part of your total financial plan, you're missing out on what is the fastest growing instrument out there right now.
Yeah, and that was going to be my point to you exactly. Is it because the amount of product that's out there, or just the way that investors, institutional and retail, are employing them into their portfolios?
Well, for investors, options are a great way to produce some income against positions that they have, or to take some money off the table and protect themselves from downside. That's one of the things institutions love about options. So I think there's some of that, and then you also have the dawn of active trading is becoming a bigger and bigger part of our industry, and zero DTE and 1 day DTE options, days to expirations, what DTE is, folks, is just having a dramatic effect on the movement of the market as a whole, and really how traders are able to manage risk.
Yeah, I mean, think about it. We saw it with the 3-day weekend that we had with equity markets being closed for Good Friday. Government offices were still open, so we had the key non-farm payroll reports come out. So when you have these 3-day weekends and anomalies such as that, now with the zero-dated options, you have alternatives versus just, okay, I have to wait till regular expiration or weekly expiration, when you could trade events in a very different way now.
Yeah, you could have a Monday position, and then that could be a completely different position for, let's say, Wednesday when CPI comes out, or when the Fed minutes hit. There, you can literally position your portfolio based on the way you think things are going to move for every event on the day of that event, and that is something that we've never had until really April of last year. So we're coming up on the 1-year anniversary of zero DTE starting to really come to the forefront, and that is I think exciting, and part of the reason why we've seen such incredible growth. But that malleability, the ability to trade however I want, is such key.
Let's talk about the Nasdaq-100 Volatility Index, or VolQ. We saw the fireworks in the banking sector in March. Are there anything you noticed in terms of VolQ versus other volatility indicators? Because of course the Nasdaq-100 doesn't have exposure to the banking sector.
Well, and that's the whole thing, is that we typically think of the Nasdaq-100 as speculative and as high flying, but if you look at VolQ relative to something like VIX, it was relatively muted, and an interesting phenomenon occurred as the banking crisis was happening, is that we saw money flowing into the mega cap names in the Nasdaq 100, like Apple, Microsoft, Facebook, Google, and out of the banks, where traditionally many people consider the banks kind of the boring safety, the boring, get some dividends, it's a safety trade. And then in a role reversal, Apple and Microsoft and those names seem to be where money is piling into when there's fear, when they're looking for a safe haven, and not places like banks and industrials and even utilities.
And Mark, speaking of the banks, we have earnings around the corner with the big money centers reporting this week. What are you looking for in terms of bank earnings? And then just when you think about this season in general, especially with forward-looking statements, as we're trying to figure out, are we going to recession? Are we not? How strong is the economy? Is the Fed getting the data points that it wants? I mean, there just seems to be so much either or out there.
Yeah, I'm really interested in what the banks, what these bank traders and CEOs are going to be saying about the relationships with the mid-cap banks and some of the other banks that have been under serious duress, what they're saying from an interest rate forecast perspective, obviously what their earnings look like, but what their deposit rates look like, and how that's been moving. Because, one of the interesting things that was pointed out to me is that you can almost look at CDs, certificate of deposit rates, what they're paying short dated, medium dated, and long dated, to see where banks' capital needs are. So I'm really interested to kind of take their whole take on the economy and what their guidance looks like. I think the guidance is really going to be key and is going to kind of tell us what's happening with the rest of the economy. So Friday should be interesting with JP Morgan and I believe Wells Fargo. JP Morgan in particular is one that I'm watching.
All right. Appreciate the insight as always, Mark. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.